Okay, thanks, Matthew, for that. A simple explanation. It's not that difficult, is it? I mean, to me, if a worker who has tax deducted from his pay gets to the end of the year and puts his tax return in, and it turns out the tax that's been deducted is more than he owes, he gets a tax refund. I mean, that's obvious. If an investor invests in a company that pays tax and there's tax deducted from that company and what's left is distributed as a dividend, and if that tax that has already been paid is in excess of what the investor should be paying, just the same as the worker, he should be entitled to a refund and is under current legislation. But what I want to do is, our concern is not only about imputation credits. Here at Gold Coast Retirees, we're advocating on a range of issues. And I guess essentially what we're saying about our retirement is there was a set of rules when we were working, and we abided by the rules and we saved for our retirement, and in the process we expected that there was some certainty going to be provided in our retirement. And that certainly hasn't been the case in more recent times. And you can see here some of the changes that have been made. These are all Liberal Party changes, and I must stress we are an apolitical organisation. We don't support any political party. You can see, in January 2015, the Liberals changed the superannuation pension rules so that all superannuation pensions would be deemed for Centrelink assessment. In 2017, the LNP lowered the assets test threshold for the age pension eligibility. So people who on one day were eligible, the next day were no longer eligible. And you'll see the impact on that. We had some members who lost $15,000 a year in Centrelink entitlements, and they had based their retirement on the fact that they would be eligible. Again, in July 2017, the LNP capped the tax-free amount of superannuation at 1.6 million. And 1.6 million sounds an awful lot, but when you trickle it down to the actual income you receive from that, it's a fairly, what we would call comfortable but not excessive lifestyle. And again in July 2017, concessional contribution caps were reduced by the LNP. You've now got a situation where Labor is proposing to make more changes if they're elected. And I won't go through these in detail, but have a look at the figures over here. The impact that it's having on retirees' income is enormous. And that's each and every one of us. And of course the one at the bottom is the one we're predominantly here to talk about today, where Labor says that they'll disallow refunds of franking credits, and the impact on retirees is $55 billion. So to put some sort of meat on the bones, so to speak, let's have a look at a couple of case studies. This is the impact of meddling of both Labor and Liberal governments. So take in 2016, a single retiree, if that person had, say, $1 million in superannuation, then that $1 million would earn about $50,000 a year. It would also entitle them to a small pension, and the franking credits coming back would be $10,700. So that's an income of $67,000 a year. That's 6.7%. It's nothing brilliant, is it? So what happened in 2017 is that the Liberal Party decided to reduce the assets test threshold on the pension. So in that particular case, this retiree would suddenly have lost $6,900 in income. Then we've got Labor proposing now to cancel imputation credits. So if that goes through, then not only will they have lost the pension because of the Libs, but they'll lose the franking credits because of Labor. And so a person who was on $67,000 a year is now down to $50,000 a year. That's a drop of 26% over 3 years. I'll bet you no politicians had a drop in their income of 26% over 3 years. So that's putting some real meat on the bones. That's how this is impacting on real people. And I know from our meetings, people are saying, I'm going to lose $8,000 in imputation credits. And with already losing, say, 10, from the pension, that has a major impact on people's lifestyle. The other thing that I find particularly galling is that what Labor's proposing actually creates some very serious divisions within our community. I mean, you've all heard that song, Australians all let us rejoice for we are young and... No, not that one. The one that says, we are one, we sing with one voice. So what we're about is having a united community. But let's have a look at what this impact is. Take a pensioner who has a share portfolio of $500,000. He would, whoops, pushed the wrong button. That pensioner would be entitled to a pension of $26,000 a year. On a $500,000 portfolio, 5% is $25,000 in investment income and franking credits of $5,300. So that $500,000 person would be on an income of $56,000. Now let's say we've got another person who's been a bit more frugal during their working life. They've perhaps not led the good life and perhaps put a bit aside. And so they've been fortunate, or not fortunate, through their diligence, they actually have $1 million when they retire. So that $1 million retiree receives no pension, will receive no franking credits. Now sure, he's got double the income, but have a look at the bottom line. Where's the incentive to save for young people to save for their retirement? It's through these government policies and this constant meddling that we have a situation where people are losing faith in the superannuation system, and why wouldn't they? I mean, to me that is very, very divisive. But it's not only, that's comparing one retiree to another. Let's have a look at a retiree compared to, say, a 40-year-old worker. This could be your son or your daughter. So the 40-year-old, in this case, we're saying that they're on wages, and the wage they've brought home, their bring-home pay over the year, was $50,000. As it turns out, when they do their tax return, they find that their employer has in fact deducted $10,700 more in tax than they should have paid. So they lodge their tax return at the end of the year, and they get that $10,700 back. That's normal. There's no rocket science in that, is there? If you've paid too much, you're entitled to a refund. So that particular person who was on a net bring-home pay of $50,000, by the time the tax is sorted out, they've got $60,700. Now, identical situation, you've got a self-funded retiree. That retiree receives net dividends of $50,000 a year, so exactly the same as the worker. It turns out that the franking credits are $10,700. So that retiree has had $10,700 tax deducted that shouldn't have been, just as the worker had. Comes the end of the year, under the current rules, that retiree gets their franking credits, and so with the same income, the same tax position, that retiree is receiving the same net income as the worker. That seems equitable to me. But what will the new rules do? Well, under the new rules, the worker's unaffected. He still gets his tax refunded. He's had no impact at all on his income. And yet what Labor's proposing is that the retiree who's still on the same income, who's still had $10,700 deducted, same amount, but that retiree is not going to receive the tax refund. Now that to me is very divisive indeed. Why would one person on a particular income and another person on exactly the same income have a different tax outcome? And that's one of the things that we're particularly objecting to.